Hello, good morning everybody. Today I'll be talking about basics of the stock market, part A, the first lecture, why to invest in the stock market. Dear friends, there are around 12 topics in this section. So we are starting with the very first topic, why to invest in the stock market. There are few good points which one can consider to invest in the stock market. You will get the best returns decade after decade as compared to other asset classes. If you are investing at the right time, you will beat inflation, definitely. Take it from me. There's another good point about the stock market is you can start with a small amount. There is no need to put all your money in one go. Another important feature of the stock market is it is most liquid asset class. There are many opportunities that are available around the year to invest. You have to wait with patience and look for that opportunity. When there is no opportunity, you can keep your money in bank. You will get 6% at least. But when there is an opportunity, only at that time you invest. This is true for the passive investors. This is going to be another source of income for them. Indirectly, you are part of the business now. Once you own a stock, you are part of the business. Then there is another segment of people who go for day trading because they find it is very exciting and thrilling. Either you are short-term investor or you are long-term investor. You will remain updated on the economic events. Now let's look at this graph. It is comparing stock market index versus other asset classes like gold, like fixed deposit, or say inflation also. Now you can see that inflation is moving around near to fixed deposit rate or gold, but stock market is way ahead as compared to those assets. So that makes very clear, it makes sense to invest into stock market. The only point you have to see that you have to do little bit of homework or you have to take some guidance rather than losing your money, taking experience from losing money and then making money after that. It is better to take guidance. Okay, we shall be talking about history of the market. When we are talking about the history, it makes a lot of sense. Why? Because history will reveal when there were so many opportunities, and on that basis you will be able to analyze when the new opportunities will come in the near future. So we will be discussing about the year 1991. We shall be discussing about year 1992, Harshad Mehta scam. Then we shall be discussing about 97-98. That was another important year when most of the southeastern countries, their currency got depreciated. And after that, we'll be discussing about year 2002, specifically after 9/11. That was the new beginning for the stock market. Then after 6 years came financial crisis of USA. That's also called Lehman Brothers crash, and it had severe effects across the world. Although the recovery was V-shaped, people lost a lot of money at that time. So after 2008, people who invested in 2008, they definitely made a lot of money till 2012, but 2012 to 2014, that period was a stable period, and then the market suddenly started moving up in the anticipation of Mr. Narendra Modi as a PM of the country. But those who missed this opportunity in 2013 to 2016, then market got corrected, and in year 2017 again in the month of February you got a chance to again invest into the market. And now the serious crash of 2020 by the fear of Corona, COVID 2019. Okay, let's start with the PV Narasimha Rao and Mr. Manmohan Singh. Both of them got together in 1991 to bring the big reforms for the country. Before that, India was facing balance of payment crisis, forex reserves were depleting, there was total economic mismanagement, assassinations, and India had to pledge gold, and of course there was no political stability. When Mr. PV Narasimha Rao and Mr. Manmohan Singh, they started the big reforms, very few people believed that India will become one of the fastest growing economy after 2 decades. All the foundations was laid down in 1990. IT boom, telecom boom and internet. All these three things changed the outlook of country by 1997. At that time, the first generation entrepreneurs like Satyam, like Infosys, HCL Tech, India Bulls and so many other names. They were making their presence at national and at international level. So these years from 1991 to 2010 provided a very strong base to the nation so that country can move ahead in the times to come. This graph shows what we have discussed in last slide very clearly. Our share in world exports came down to merely 0.5% and it remained around 0.5% for quite a long time period before it started moving up after 1990, and you can see that we regained by 2015. There was another big thing happened in 1992. It's a Harshad Mehta scam. So many people got trapped into the stock market in 1992. I was also no exception to that. The scam was with the association of bankers, politicians and brokers. Due to that scam, India had to postpone their reforms. That was the biggest setback. The market suffered a loss of more than 100,000 crores and the Sensex came down tumbling from 4,500 to 2,500 in a matter of few days. So all these things happened. You got an opportunity to invest in 1996 when things were cooling down. That was the time when one should have invested into the stock market. And there are some people who worked under Harshad Mehta like Ketan. They also tried to replicate the scam in their own way because they knew the dirty tricks of the market, of the bankers, of the politician. If you look at the impact, the three big things happened. People lost a lot of money. The liberalization policies were put on hold and so many companies at that time, they were not able to raise money from the capital market. Now this is a chart which is showing that if you had invested rupees 100,000 in one particular year, how much it would have grown by now. This thing also tells us very clearly, if you will keep invested for years, your capital may not grow at that pace if you follow some different strategy. So what will be that strategy we're going to discuss in the coming slides. Now there is a myth that people say that people lose money in the stock market. Of course they lose, but if they do speculation, people who invest passively, they make money. Again, you can see the comparison is between fixed deposits, silver, gold, provident funds and stock market. So we will going to discuss about this in the coming slide. From 1990 to 2000, we can call it as the lost decade. As I said in the past, that stock markets in actual started from 2002. When Nifty was launched in 1994, it started with a base level of 1000. But in 2002, somewhere around April, the index, Nifty index came down to 870. So that was the point. Those who have missed that decade, they could have entered into the stock market. Have a look at this chart. This chart is showing the PE ratio, price earning ratio of the index. It is basically ratio of price, ratio of index divided by earnings. Earnings are at the denominator and Sensex price is at denominator. So this ratio will increase in case if index will go up or earnings will come down and Sensex remains at the same level. So from the thumb rule, you can see whenever PE ratio comes around 17, you can see those points. This is the first time. It was around 1998. Somebody could have entered at 1996, waited for 2-3 years, 4 years precisely, he would have made handsome amount of gains. Entry 1. Entry 2 comes in 2002. Remain invested, and when PE ratio is around 22, you can make an exit. Second chance. Third chance, 2008. End of 2008. US market financial crisis. That was the time if somebody would have invested, their capital would have grown 4 or 5 times in just a matter of 1 year. This was a third opportunity. The fourth opportunity came in the year 2013 and 14 before BJP came into the power. So if somebody would have invested here again and remain invested for 4 years, they would have made good amount of gain. So from 1998 to 2018, 20 years you have got 5 opportunity. This is the 5th one. The index came around 6100 from 9100 and again it went back to 12,000 at that time. So what precisely I want to say here is that in 20 years you got clearly 4 to 5 opportunities, and the new opportunities coming in 2020. I don't know what is going to be the impact of Corona, but I am sure if market comes down further, Nifty index, which is right now around 9100, it came down to 7500 few days back. If again it comes down to 6000 level, I don't know, it may come. One should again enter into the market and stay invested for 2-3 years. You will make money. So we'll wait for that opportunity. Here you can start SIP. We'll cover about SIP in next lecture. I'm not a very big fan of SIP. People call it a systematic investment plan. I call it a stupid investment plan, because at every level you are buying and you will end up with a very average kind of returns. The same graph, I'm enlarging it. I'm sharing it with you how 2018 we can again, those who missed the bus in 2013 to 2016, they could have entered in 2018 or remain invested till 2019, end of 2019. The PE ratio, when it crossed 27, 28, there is no point in staying in the market. I had a discussion with many people, but it is very difficult to pinpoint. So this is a time you should exit. It may take years, 2 years, 3 years, but definitely once Nifty index is at a P ratio of about 26 to 7, there is no need to stay invested. It's a time to exit. It is time to book profits. And as usual, wait for the next opportunity to enter. This is how you are going to make more money if you are going to invest your money in stocks, and in 4 or 5 times in 20 years you will going to churn your money, enter, exit at certain level, again enter, then exit, then wait for the next opportunity. After 5 opportunities you will see your capital has grown many times. Now, let's see the major crashes that came. In 1997 Asian financial crisis, of course 1992 was Harshad Mehta scam. 2001 it was a dot-com crash. Don't call it crash. That is another opportunity for us to invest. And 2008 and 9 global financial crisis, another opportunity. And now Corona is going to be another major opportunity. Now look at the cutting I have taken from a paper. At that time, in 2009, he was trying to predict that market will head for another crisis like that of 1991, but nothing happened like that. So reading a newspaper is a different thing, and believing the newspaper is a totally different thing. You read the paper, but don't believe them. Don't believe them at all. They have got a limited knowledge. So you make your own studies, make your own strategy, and work on that. Whenever we get a political party that is strong, stable, stable means it should not be coalition government. The market has given them thumbs up, and you can see in 2005, after initial jerk, when Congress joined the hands of the left, the market started moving up. Then when Modi came at that time, markets again welcomed it, that one party, single party, decision making will be easier, and market moved up. Now let us see 2020. Due to Corona, the market has come down, but to assume that market will bounce back to the same level at this stage, it is too early to say. When market goes down, there are so many pullback. This pullback can go up to 10,000 or it may go up to 10,600 levels. But striking back to 12,500 seems to be very low possibility, very low probability. So what should be the strategy? As you have seen last week, stocks have moved substantially, 20 to 50% in last 5-10 days. It may go up another 20-30% also in 2-3 days, maybe a week. So those who have invested at this time, they should make an exit around 10,500 level. We'll review the situation after next month in May. What is the effect of Corona? How much damage it has done to the economy? Market may go down, probability of going down is more. But At this level, we have to take the stock of the situation, and after that we should decide whether market will go back to previous level or it will take some time to reach to that level. Of course, it will go up. The question is whether immediately in next 6 months or after 2 years or 3 years. That is the only question. So with this, I close my presentation. If you got any questions, you can ask me. I'll answer your queries. Thank you for listening. Thanks a lot.